Psychological tips for crypto saving. Be mentally strong. Achieve long-term results. Saving in the crypto world, such as Bitcoin or other digital assets, is not just a matter of technical buying and saving. Psychological factors are often a hidden barrier that makes many people fail. Emotion, fear, or impatience can ruin a well-thought-out investment plan. Here are the psychological tips you need to instill before starting to save crypto, so that it is not easily shaken in the midst of a volatility storm. 1. Conviction. Conviction like a rock. Sail the crypto ocean with open eyes. Imagine you are the captain leading a ship across the crypto ocean, where the tidal wave of volatility can blow the ship away in an instant. Conviction is the steel anchor that keeps you steady when the fear, uncertainty, doubt, storm hits. Without conviction, you might fall over when Bitcoin drops 30% in a day or when Elon Musk tweets about Dogecoin. But with conviction, you see it as an opportunity to buy at $30,000 with a smile on your face, confident that Bitcoin will return to $60,000 or more. How to build unbreakable conviction. 1. Dig to the root. Crypto is not just digital money, it's a revolution. Don't just fixate on the price of $BTC or $ETH on Binance or Coinbase. Learn why this technology was born. Bitcoin is a rebellion against the traditional financial system. It was created after the 2008 crisis, when banks like Lehman Brothers collapsed and governments printed money, quantitative easing, endlessly. Bitcoin, with a fixed number of 21 million coins, was the answer to inflation eating away at the value of the dollars in your bank account. Ethereum is not just crypto number 2. It's a machine that turns legal contracts, art, even identity, into unmanipulable code. Imagine being able to own a house through an NFT on OpenSea without needing a notary, or borrowing $10,000 on Aave without a bank license. Real example. When Terra Luna plummeted from $116 to $0, those who just followed the trend were crushed. But Bitcoin holders who understood the philosophy of sound money remained calm, knowing that Bitcoin was not dependent on stablecoin algorithms or CEO promises. 2. Don't be a tourist, be a crypto native. Many people enter crypto like tourists to Bali. Take a photo in front of to the moon, then run away when it rains. In fact, to survive, you need to be a local who understands the season. Read the white paper, not the price. Before buying $SOL on Binance or $AVAX on Kraken, read the project document. Are they solving real problems? Example, Solana promises 1-cent transactions at high speed, but is their network really decentralized? Follow technology, not gossip. When Ethereum switched to proof of stake, the merge, the price dropped to $1,000. But those who understood that this upgrade reduced carbon emissions by 99% and made ETH a productive asset, it could be staked to earn 4 to 6% interest, increased their positions. True story. In 2020, Bitcoin fell to $3,800 due to the pandemic. But believers who understood the halving cycle, a decrease in the new supply of Bitcoin every 4 years, bought more. 2 years later, BTC reached $69,000. 3. History doesn't lie. From hacker toy to trillion-dollar asset, crypto is a 24/7 market full of shouting. But remember, Bitcoin has died 457 times. According to Google, every time the media says Bitcoin will collapse, it actually rises stronger. In 2017, JP Morgan CEO said BTC was a scam, but now his own bank offers crypto products to clients. Regulation is not the end of the story. When the SEC sues Binance or Coinbase, the price might drop 20%. But look at the pattern. Once U.S. regulators approve a Bitcoin ETF, inflows into the market could reach billions of dollars. Analogy. Imagine you bought Amazon stock in 1997 when it was $1.50, before the split. People said, online stores will never succeed. But with faith in Jeff Bezos' vision, you could hold on until the price of $3,500 per share. Crypto is the same but at 10x the speed. Practice your conviction on the exchange. Dollar cost averaging, DCA, allocate $100 per month to buy Bitcoin on Kraken/Binance. No matter the price is $20,000 or $60,000. It's like saving digital gold. Staking for passive income. On platforms like Coinbase, you can stake Ethereum and earn 3 to 5% interest per year without having to sell it. Don't underestimate cold wallet. If you have $10,000 plus worth of crypto, keep it in Ledger/Trezor. Confidence must come with security. Remember, conviction, not blind fanaticism. Always diversify. Don't put all funds in crypto. Use the principle of 5 to 10% of the total portfolio. Beware of scams. Projects that promise 100x in a month on Telegram are usually rug pulls. Conviction is built on research, not hype. The crypto ocean will never be calm. But with conviction built on knowledge, you won't be easily swayed. As Warren Buffett said, risk comes from not knowing what you're doing. If you know what you're buying, the fluctuations of $10,000 will be just a small ripple towards the island of true wealth. 2. Don't chase instant gratification. It's not a sprint race. Your crypto garden needs patience, not a quick hoe. Imagine you're a farmer planting a crypto garden. The Bitcoin, Ethereum, or Solana seeds you plant today won't bear fruit tomorrow. It will take a rainy season of volatility, a hot sun of FUD, and the fertilizer of patience to see it grow into a sturdy tree. Why is saving crypto like gardening? 1. Volatility is weather. Sometimes rainy, sometimes dry. Crypto prices can drop 20% in a day, then rise 50% a week later, just like the unpredictable seasons. But a wise farmer wouldn't uproot his crops because of a rainstorm one day. Real example. December 2022, Bitcoin plummets to $16,000. Many panicked and sold below $20,000. But those who were patient and continued to water through DCA, dollar cost averaging, $200 a month on Binance, are now smiling to see BTC break $100,000, 2025. 2. Time frame is season. Plant for 5 years, not 5 days. Beginner farmer, want to harvest next week. They buy Shiba Inu because it's only $0.00001, then stress out when the token goes sideways for a month. Master farmer. Their goal is a fruitful garden by 2030. They don't care if Ethereum drops to $2,500 today because they believe the merge and EIP 1559 will make ETH the digital oil of the future. Strategy. DCA. Allocate $50 to $500 per month to buy blue-chip assets, BTC, ETH, on Coinbase or Kraken, just like watering your plants. Staking. Make crypto a fruit-bearing tree. By staking $ATOM on Binance, you can earn 8% interest per year, no need to sell. 3. Trading temptation is a pest. Don't let FOMO destroy your garden. Many people are tempted to sell Bitcoin when the price goes up 10%, just $1,000. Then cry when it explodes 300% a year later. It's like picking unripe fruit because you can't wait. True story. In 2017, Bitcoin reached $20,000. Many sold out of fear that it would go down. But those who stayed until 2024 saw prices 3x higher. In 2021, Dogecoin jumped to 70 cents because of Elon Musk's tweet. Those who bought at the peak then panic sold lost 80%, while BTC holders continued to hold. How to fight FOMO. Set an objective sell target. Example, sell 10% of Bitcoin if the price reaches $100,000. Ignorance is bliss. Don't check the price every hour. Use apps like Blockfolio only for price target notifications. Crypto gardening tools for smart farmers. 1. Cold wallet, Ledger/Trezor. Store $5,000 plus worth of assets here. Don't let hacker pests steal your harvest. 2. Auto buy on exchange. Platforms like Gemini and Coinbase allow you to set DCA automatically. Set and forget. 3. Educational community. Follow the Reddit r/cryptocurrency forum or Telegram groups of projects you trust. Avoid pom-pom groups that only shout to the moon. Don't forget, gardens need diversification. Healthy portfolio. 60% BTC/ETH, strong tree. 30% utility-based altcoins, like Chainlink for data oracles. 10% for experimentation, if risk-averse. Don't plan all in one hole. If you hold $10,000, don't put $9,000 in memecoins with no roadmap. Saving crypto is the art of believing in the process. As Peter Lynch, the stock legend, said, Investing without patience is like driving blindfolded. If you don't want to wait 5 years, don't start planting today. Note: bitter reality. 90% of crypto traders fail because of emotions. Don't be part of that statistic. Warning: projects without white papers or anonymous teams equals weeds. Pull them before they poison your garden. Consistent is hard, but trickable. Auto-fly the crypto sky without getting lost. Imagine you are a pilot flying through a crypto storm. If you rely on manual control, your hands will shake when price turbulence comes. But with an automatic system, the plane will stabilize itself. You just need to focus on the final destination. Consistency is not about willpower, but about designing a system that defeats human nature. 3. How to build an autopilot system for crypto investing. DCA, automated investing, without the hassle of thinking about prices. Dollar cost averaging, DCA, is a powerful tool to neutralize emotions. Example: practice on Binance/Coinbase. Set an auto buy of $100 every week for Bitcoin, whether the price is $30,000 or $60,000. It's like saving for retirement in a mutual fund, but with an asset that has the potential to grow 10x. Real example: if you DCA Bitcoin from January 2022, peak price $47,000, to December 2023, average price $28,000, your average buy will be much lower than the person who went all in at the peak. Illustration: month Jan 22, BTC price $47,000, funds by $100, BTC amount purchased 0.0021 BTC. June 22, BTC price $20,000, funds by $100, BTC amount purchased 0.005 BTC. Dec. 23, BTC price $42,000, funds by $100, BTC amount purchased 0.0024 BTC. Total 2 years, $9,800, 0.26 BTC, average purchase price, $37,500. When BTC returns to $60,000, your portfolio equals $15,600, plus 59%. 2. Monthly evaluation. Don't check prices every hour. Opening crypto apps every 5 minutes is like constantly weighing yourself on a diet. It's stressful and unproductive. Set an alarm. Check your portfolio only every 1 to 2 months. Use that time to verify if the DCA is still running. Review projects, e.g., is Ethereum still dominant in DeFi? Is Solana often downtime? Example tools. Use Google Finance spreadsheets or apps like Delta Portfolio Tracker for quick analysis. True story. In 2020, an investor who only checked his portfolio every 3 months was not tempted to sell Bitcoin when it dropped to $3,800. The result? He was still holding when BTC reached $69,000 in 2021. 3. The noise filter. Block the hype. Focus on fundamental signals. Crypto media and influencers love to exaggerate news. Noise example: Bitcoin will go to $200,000 this year, when there is no technical basis. Chinese regulations are destroying crypto, even though Bitcoin has already died 14 times due to similar news. Examples of important signals: institutional adoption, e.g. BlackRock launches Bitcoin ETF. Technology upgrades, e.g. Ethereum improves transition speed with Dinkin upgrade. How to filter noise. Unfollow hype accounts. Avoid Telegram/YouTube that just screams pump without analysis. Read research reports. Follow reports from ARK Invest, CoinShares, or Messari for fact-based data. Mandatory tools for your autopilot system. 1. Auto buy on exchange. Coinbase, recurring buy feature. Binance, automatic DCA for 200 plus cryptos. 2. Smart notifications. Set alerts in TradingView when BTC drops 20% for ad buy or rises 50% for sell target evaluation. 3. Cold wallet for long parking : move assets greater than $10,000 to Ledger/Trezor. If it can't be sold in one click, you won't be tempted to impulse trade. Don't forget, the system can be upgraded, but don't tinker with it. Review every 6 months. Are the projects in the portfolio still relevant? Example: if FTX collapses, do you still hold exchange tokens? Adjust DCA allocation if financial goals change. Stay diversified. 70% to blue-chip assets, BTC, ETH. 20% to mid-cap projects with utility, Chainlink, Polygon. 10% for experimentation if you like risk. Consistency is the compounding effect's best friend. As Charlie Munger said, the first rule of compounding: never interrupt it unnecessarily. With an autopilot system, you can sleep peacefully while your crypto asset does the work for you. Keep flying, don't get caught in the FOMO storm. Critical note: sad statistic, 95% of crypto traders fail due to overtrading. Don't be one of them. Platform traps. Exchanges sometimes lure you into trading with 100x leverage ads. Remember, you're here to save money, not gamble. 4. Don't be greedy. Grow income, not lottery. Build a castle. Don't gamble with the foundation of your house. Think of crypto as golden bricks that can beautify your palace of wealth. But if you use all the bricks to build a tower of speculation, the palace will collapse when the storm comes. Greed is a bad architect. It tempts us to sacrifice basic needs for the dream of sudden riches. Anti-greed strategy, from crypto hype to financial power. 1. Emergency fund, a safety pillow before riding the crypto roller coaster. Before buying $1,000 worth of Bitcoin, make sure you have 6 to 12 months worth of cash saved. An emergency fund is an umbrella that protects you from panic decisions. Tragic example. In 2022, a trader sells his car to buy Luna at $80. When Luna fell to $0, he lost his transportation and savings. Whereas, if he had used only 10% of his portfolio as emergency money, the loss would not have ruined his life. How to save? Separate account, not on a crypto exchange. Liquid assets, USD deposits, digital gold, like PX Gold, or stable coins outside the trading platform. 2. 5 to 20% only. Crypto is not king, but a warrior in your portfolio. A smart portfolio is like a dinner plate. Rice, 60 to 70% stable assets, ETFs, gold, bonds. Vegetable, 20 to 30% medium growth instruments, blue chip stocks, property, mutual funds. Chili, 5 to 20% crypto, a little but a lot of excitement. Allocation example. Risk profile, conservative, crypto 5%, stocks 60%, gold 25%, cash 10%. Moderate, crypto 15%, stocks 50%, gold 20%, cash 15%. Aggressive, crypto 20%, stocks 40%, gold 15%, cash 25%. Note: if total assets are $50,000, max crypto allocation for aggressive profile equals $10,000. Don't confuse crypto with retirement savings. 3. Income is fuel. Better to upgrade yourself instead of hoping for meme coins. Instead of spending time monitoring the Dogecoin price, invest energy into upgrade skills. A programming, design, or AI course on Coursera could raise your salary $10,000 per year. That extra money can be allocated to crypto guilt-free. Side hustle. A side hustle, selling NFTs, rental properties, affiliate marketing, can be a money printing machine to buy Bitcoin. Real example. A graphic designer learned coding for 6 months, then moved to a job with a 40% salary increase. From that increase, he allocates $300 per month to ETH via Coinbase without having to sell any other assets. The perils of greed, a story that repeats. All in on ADH, all-time high. In 2021, many people sold their houses to buy Bitcoin at $60,000. When BTC fell to $16,000, they were forced to sell at a loss to pay off debt. Margin trading. Borrow $50,000 at an exchange to trade with 10x leverage. When the price drops 10%, the entire capital disappears. Memecoin cult. Projects like Squid Game token went up 10,000% and then rug pulled, sucked up funds from people who wanted a quick return. Tools to maintain rationality. 1. Budgeting apps. Example. Mint. You need a budget, track your expenses, and make sure crypto doesn't eat into your budget. 2. Auto-save to emergency fund. Every paycheck, automatically set aside 10% to an emergency account through bank features such as direct deposit. 3. Account segregation. Account 1 for daily living. Account 2, for crypto/traditional investment. Account 3, emergency fund, do not touch. Warren Buffett. Risk comes from not knowing what you're doing. Don't invest in crypto if you don't understand how it works. Naval Ravikant, angel investor. Get rich without the lottery through asset ownership and technology leverage. Your grandfather must have said, a little bit goes a long way. Crypto can be a trigger for wealth growth, but only if you don't make it a godsend. As the Wall Street saying goes, bulls make money, bears make money, pigs get slaughtered. Don't be a greedy pig. Be a smart investor who builds the foundation before the tower. Final warning. If your crypto portfolio is bigger than your emergency fund, rebalance immediately. Remember, no one can predict crypto prices, but everyone can control themselves and their income. Cover. Crypto is not magic, but a test of patience. Saving crypto is a psychological game. The winner is not the one with the best technical analysis, but the one with the most patience and discipline. Volatility will constantly test your faith. The temptation of instant gratification will always be there, and fear will haunt when the market is red. But remember, the rich man in crypto is not the one who buys when prices rise, but the one who stays calm when everyone sells. With conviction, consistency, and good risk management, saving crypto can be one of your steps towards financial freedom. Start now, but think 10 years ahead. Okay, before we end, don't forget our golden rules. 5 important rules of Mr. So Crypto. First, don't use hot money. Use extra or idle money. Do not use money for daily needs or money that will be used in the near future. Second, don't over-leverage. Risk what you can afford to lose if you trade derivatives, futures. Always use a stop loss because the crypto market is very volatile. Third, 70 Bitcoin 30 altcoin. Always allocate more in Bitcoin because Bitcoin is the parent of crypto. By allocating more in Bitcoin, your portfolio will be safer when the market does not meet expectations. Fourth, always stay cash. Always stay in cash 10 to 20 to buy when the market discounts or drops significantly. Then you can sell when the price has risen so that you still have cash for the next discount. Fifth, think long-term. Investing is not about 1 or 2 days to get rich. So think long-term and minimize the risks that might make your money disappear. Everything takes time. Remember, Warren Buffett didn't build his fortune overnight. If you find this video useful, help us to continue to make videos like this by clicking subscribe and share with your family and friends. Don't forget to let us know in the comments column if there is anything you have questions about, because your comments mean a lot to build this channel. See you soon, and don't forget, HODL knowledge and mindset first, then HODL assets.